All right. It is about time to start. Again, thank you all for coming. I realize that we have a smaller crowd today because I think we just sent out the email yesterday, the day before, but we're really excited about this opportunity. It's going to be the first time we use our founderless tribe, which Travis will talk about in a moment. But I do have just a one little disclaimer I do want to read out here just to make sure everyone understands. This is a development deal, and it is probably higher risk than the typical deal many of us evaluate and invest in. And just like all of our other deal webinar deals, this deal has not been vetted by Left Field Investors or any of the founders or members. Left Field Investors is not recommending an investment in this or any other deal. Left Field Investors is presenting this opportunity only as a way for our community to invest and qualify for higher returns potentially. The founders of Left Field Investors may or may not invest in this deal. Each person must evaluate this deal individually and must make their own investment decision. If we had attorneys, that would be written by them. Actually, we do have attorneys now, and they tell us to say that stuff, so we did. First of all, I want to thank Aspen Funds. They're one of our preferred partners, a great partner of ours. They have a deal. They've reserved a $500,000 spot for us, and I'm really excited about it. And I want to introduce first Travis Smith from TribeVest, as he is going to chat about the founderless tribe and what that is, and then we will introduce Ben Brundage from Aspen. So Travis, you want to kind of tell your story here?
You bet. Hey, thanks, Jim. And Ben, good to see you. And as always, great to be in a Left Field Investors meeting here. And this is an exciting moment. As most of you know, we're a longtime partner and have been with Left Field Investors since the beginning. And we just continue to evolve and mature our relationship and partnership. And this product that TribeVest developed was in the spirit for Left Field Investors and a way to better serve the community. And what we're introducing, and we haven't kind of branded it yet, but Jim already mentioned it's what we're kind of calling internally a founderless tribe. And I think more appropriately, it's going to be called a single deal open tribe. And for those of you that have never participated in an investor group or an investor tribe on the TribeVest platform, either with Left Field or without Left Field, an investor group is a fantastic way to come together, formalize, and to be able to form a multi-membered partnership so that you can come together and take action together, pulling capital, and then participate in a deal as a single entity, and really writing a single check. So we've streamlined it. We've made group investing easy, safe, and transparent. And we just continue to build on that. And this is really the next level. As easy, safe, and as transparent as we've made it, there's always been this extra work, or let's call it burden, on the founder, the person that needs to initiate the tribe in order to get it going and to manage it. And what we've been able to do here is when a deal comes to Left Field Investors, we just open up a tribe, and it comes with certain parameters. And if anybody wants to join it, if they qualify, and they can, then we'll actually manage the commitment of the members, the capital, and then when it hits the threshold, we'll go ahead and go through filing the LLC, opening up the business bank account, and all the good stuff that TribeVest does. So that's really it. And I think the extra bonus here is, not only is Left Field Investors a partner, but so is Aspen. So there's a double benefit here in that most of the first year costs associated with an investor group will be covered. So that's really an exciting piece of this too. So the table is set for everybody to participate in a seamless way via the tribe. I will just pull up real quickly, if I can here. And Jim, maybe we can send this out in the chat and then also on the email after. But, you know, should you want to participate, we're just sending out this form, and it does give the details of this tribe, which are really the details of the deal. And it shows, you know, yes, you need to be accredited, you know, for the tribe to actually go ahead and form. We've got to pass a $500,000 threshold, and the minimum for each member is 25K, which is significantly lower than if you went in, you know, individually in this, which I know Ben's also encouraging individual investors at a certain level. But this one's nice because it qualifies for the preferred, different preferred benefits and rate. This form should take you just a few minutes to fill out. You submit it, and you basically have reserved your spot on with this tribe. Jim, was that okay?
Yeah, that's perfect. That's perfect.
All right.
A couple of things that I just want to highlight. This tribe will not happen if we don't get to 500,000. So that's one thing. The nice thing is the minimum is, as Travis said, 25% of the minimum if you went direct, and you also get those preferred returns of 8% instead of 7%, and some back end extra returns as well. So that's the exciting part about this. This is the first time we've done this, and the only way to get in this deal is to fill out that form. It was in the email that went out 3 hours ago. It will be in the email that goes out hopefully tomorrow with the recording of this video that will allow you to fill that out and get ready to invest. Another thing about this is a quick turnaround deal. It is the 9th of December now. That soft commit form needs to be finalized by the 12th of December. And that's when we're going to know if we got to the 500,000 or not. If we don't get to the 500,000, the tribe will not happen. And anyone who wants to invest can still do that, but the minimum will be 100,000, and you'll go direct through Aspen. So that's kind of the deal. Travis, you have anything to add?
No, I'm really glad you pointed out those things. The threshold is key, and the fast turnaround. This is going to be tight. We can pull it off, but those deadlines are real, and just make sure we're paying attention to them. But we're really excited to facilitate and enable and empower this opportunity.
Thank you, Travis. And this couldn't be done without TribeVest, and so we definitely appreciate the partnership there. And now I would like to introduce the other group that this could not happen without, and that's Aspen Funds. As I mentioned earlier, a great partner of ours, preferred partner. They were one of the top sponsors of our meetup. We appreciate that. And we're just really excited about all the partnership opportunities that we have with Aspen. So with that, I'll turn it over to Ben. He's going to talk about the deal and give us all the information we need. And then we will do some Q&A at the end. If you have questions as we go, feel free to just throw them in the chat and we'll get to them at the end. So Ben, I'll turn it over to you.
Perfect. Well, thank you so much, Jim. Really appreciate that. And Travis, you as well. So thankful to be partnered with both LFI and TribeVest. You guys make things so much easier for us. I mean, we're doing this day in and day out, and it is a breeze with you all and just left field folks. So really grateful for you. And just glad to be talking to left field folks again. You know, it wasn't too long ago that we were out shaking hands, meeting people in person at the last meetup, and that was a blast. So glad to be here offering you guys some inside baseball today on this deal. And what's going on here. So my disclaimers here, just so you know, obviously there is risk in every single investment. This is more on the development end of the scale. So far more speculative. Please keep that in mind. For the purposes of this webinar, this is not a solicitation for investment on Aspen's side. This is an educational webinar just about this property in specific. So that being said, we're really, really excited to be able to offer this deal to you guys and put this out there. So let me share my screen and we can go through this deal. Okay. So here's disclaimers here. You guys, please go through this if you're going through the deck here. So our sponsorship team, some of you might have met Bob Frazier. He is the macro-driven data scientist, brilliant guy, has a ton of background in both investing, finance, computer science. Jim Mafuccio really has that key background in real estate, over 30 years in full-time real estate. Dan Schulte, brilliant man who is both a CPA and an attorney, just a sucker for punishment and has lived in school for a long time, has been out and about and has over 20 years in asset management experience and private equity. And then Ben Frazier, who many of you have met, our chief investment officer, has a robust banking background. He's our CIO. And love having him around. So let me start with Dan real quick on really how we found this deal. So here's kind of the inside scoop for you all is Dan is the chairman of a REIT that is based in Wichita. Dan is from Wichita originally. There's a REIT down there that actually developed the neighboring property on this deal. So he's kind of had the inside scoop on this, the remainder of this property here. He's known about it for a long time and has kind of kept tabs on it. And this has been in the works for us for a little over a year. So we have been actively kind of pursuing this investment for a little over a year. It's kind of just materialized now, and we're certainly excited to be able to offer it. So Dan has extensive background in the Wichita market. And we know this property really, really intimately and have some really great partnerships that I'll get into here. So we're partnering with Area Real Estate Advisors. They have helped us get a tax abatement. They are helping marketing this deal. Wygan down there in Wichita, they're marketing this deal as well. And across the construction, this is who's putting the building up for us here. We'll skip some of these facts on Aspen's kind of macro-driven trends. We do have a webinar, or I'm sorry, a podcast that y'all can listen to on overall kind of macro-driven trends. That's what we do here. We're kind of agnostic when it comes to what asset class we're investing in. We're just looking for the opportunities and seeing, what's going on in the economy and what's pushing us towards them. Industrial is certainly one of those asset classes. Now we are seeing a major shift. This is a mega trend. So Bob spoke about this at the last left field meetup. There's a handful of mega trends that are going on in the globe right now, and particularly in the nation, one of which being a massive effort to reshore manufacturing and warehousing to the United States. Companies have looked out, and COVID did not cause this, but it exacerbated an issue that was already there of political risk. What happens when your supply chains fall apart? There are so many things. And with automation and really skilled labor, it's actually cheaper at this point. Technology has gotten so good that it's cheaper to manufacture in the United States than it is overseas for highly specialized manufacturing, which is what Wichita is known for. So there is this deglobalization trend that just makes us very, very excited about industrial. I'm moving forward here. In Wichita, Kansas in particular, there is hardly any industrial space that's available. They have a massive absorption rate, and related to that, a very, very low vacancy rate. It's under 3% in this market. So this deal in specific, we are purchasing fully entitled land. So this land is fully entitled. A lot of the earthwork has already been done for us. The land's entitled, where we will be building 2 separate warehouse/manufacturing facilities. So a total of 340,000 square feet. This is built in 2 phases. We're trying to stagger it. That kind of helps de-risk it just a little bit if we stagger those groundbreakings on each phase. Now this Wichita, Kansas, this is fascinating to me and most folks. Wichita per capita is the #1 skilled manufacturing workforce in the nation at 17.5%. So this is the highest concentration of skilled manufacturing in the nation. That is mainly due to the aviation industry down there. So Cessna started down there. You got Learjet, you've got Spirit Airlines, Boeing manufactures parts down there. There's some pretty other robust industries that we're excited about, but that has made this workforce extremely robust, very smart manufacturing workforce. So our strategy here on this one is to build these units and stabilize them and flip them out as quickly as we can. We're anticipating a 2 to 3 year hold on this project. So there's no cash flow on this one. There shouldn't be. And then at the end, you should be getting one larger check there at 2 years. We're trying to really be conservative with our projections here. So 2 years is really what we're thinking, but 2 to 3 years is what we're saying on this one. So there is a high demand for this in the Wichita market. There is, I mentioned kind of some of the aerospace companies that are down there, but we've also got Koch Industries and Cargill. So Cargill has their meat headquarters down there. These are 2 of the largest privately owned companies in the world in Wichita, Kansas. Coleman, the camping stove, they manufacture down there. Pepsi has a large bottling and shipping facility. That's all down there. So a lot of need for this sort of space. Also, I do want to mention that on every single Aspen deal, our management team is co-investing. So we have a significant amount of funds in this deal as LPs. And so that's always important to note is I believe left field investors actually are probably getting better profit splits than our individual LP managers are on this one. So keep that in mind. We're excited about our debt terms on this as well. The debt markets, this is the big question mark out there in real estate today is what the heck is, where's your interest rate going to land? You might start due diligence on a process and next thing you know, you're up 50 basis points, 75 basis points when you close on the deal. We're already locked in on our debt terms. I'll talk about that more here in a moment. We're also excited. I mentioned before, Crossland Construction. So Crossland is a major builder of industrial space all over the nation. They have a large office in Wichita. This is actually, it's a family-run company, which we really like. It aligns with Aspen very well. But we have signed a G-Max contract with them. So this is a guaranteed maximum spend. So this helps to de-risk it a little bit more as we are going $60 a square foot. That's the maximum that we will be spending on this project. Anything over, they're going to eat as the construction company. So the GC eats everything over that. So they have interest in keeping costs low. They also have the ability to self-perform. So as most of you know, GCs will often sub different things out, whether it's earthwork, concrete work, whatever it is. They have the ability to self-perform if they need to. So if a bid comes back a little higher than they anticipate, they can just do it. And then also we're excited about some of the tax implications on this deal. I'll talk more about that here in a moment. Here's our investment overview. Now this is outdated for you all. So here's the standard. Let me reiterate what the case is for left field investors. So pooled together, we're looking for a $500,000 investment together. Individually, your minimum, I believe, is $25,000. There's going to be an 8% preferred return, an 80-20 split thereafter, up into a 20% annual average return, an average annual return. So what that means is, at the end of this thing, when you equal out to receiving 20% annually, then the split is going to change again to a 60-40. So this is very, very different than what a lot of our other LP investors are getting. You get a lot more meat on the bone. So you can look at these return metrics. Now, of course, these are projections, but they would be higher if you're coming in through the tribe here. We really, really are seeing a national need for industrial space. Wichita, as I mentioned, is absolutely no exception. The national average on the vacancy rate, 2.9%. That's virtually non-existent, virtually non-existent. And so, you know, we're really looking for, and this size space in particular, I should add this is not the 1 million square foot Amazon retail space. This is really going after specialized manufacturing. So the first phase is about 200,000 square feet. The second phase, a little over 100,000 square feet. This is really going for that specialized manufacturing, specialized warehousing space. And so that changes the equation a little bit here. So we've kind of talked about the market of industrial and what's happening. Here's kind of what we're seeing here is we would anticipate industrial obviously beating inflation. That's what this graph is. Now, these are industrial supply and demand trends. Now, your absorption rate is extremely high. It's just a little bit higher than completion. So we're not really hitting what we need in the nation, and vacancy rates extremely low. Nearly everything has been absorbed in the market today. Rent continues to grow in warehousing and distributions. This is shocking to us here. We have never seen this before. Europeans are moving their manufacturing to the United States, believe it or not. So Germany in particular, energy costs are so high that German manufacturers are deciding to move their manufacturing to the US. We'll take it. We're certainly excited about that. And we chatted about reshoring a little bit before I mentioned it. Here's some of the concerns that companies have and why they are considering reshoring. We definitely have tariff concerns here on the docket. Ethical concerns, slave labor, terrible work conditions. Those are definitely concerns for a lot of companies as some of those social media and information sharing really has taken off. We see more and more of the working conditions overseas, particularly in Africa and Southeast Asia. There's quite a few government incentives right now for companies to stay in the United States. And skilled workforce, of course, number 2 on this list over here. We have a far more stable and educated, specialized, skilled workforce here in the United States. So here is the deal itself. So purchase price, this is land and construction, $23 million here. The total project budget, $28 million. Our equity raise is 8.6 total. We have up to 340,000 square feet. We can extend. Right now, we're at 325,000 square feet between 2 buildings. And we are thrilled to be able to say we have a 95% tax abatement from the government down there. So the city and county are thrilled that we have come into this area, that we're doing this project. This not only shows the need for industrial in Wichita, but really just their excitement. So this, we're glad, you know, we're first and foremost glad to be able to save the cash. This is an expense that 95% off. Wow, that's great. But also this solidifies what we've known, which is there is a crazy need for this space. So that is a 95% tax abatement for 5 years. We do have the ability to extend should we need to. This is fully transferable upon sale. So this is just going to incentivize some future buyer to come along and buy this thing. If there's a long-term tenant in place, of course, they can extend that forward. So we're thrilled to have that. Now, we have been working with the Economic Development Council down there with some of our real estate advisors, our partners, and then Dan Schulte, of course, knows a lot of those guys on the EDC. It's called the Greater Wichita Partnership. Now, they not only helped us to get this tax abatement, they are courting businesses and companies already on this space. And so they are working with our broker. They're already having meetings, marketing this deal, or marketing this actual property itself for someone to sign a lease. Now, in Wichita, over the past 5 years, there has not been a case where a building is built and it's not leased up. In the past 5 years, everything has been leased up before completion of the building. So we are excited about that for sure. Here are the debt terms on this project in particular. So 65% LTC on that. Now, let me speak a little more to the debt terms, get a little more specific for you here. Now, this is fixed and locked in at this point. We're at a 7% interest rate on this, 3 years interest only period, and a 2-year mini perm option at the end. This really maximizes our flexibility with this project. So we do have the option to kind of extend, do that mini perm option, and hang on to it a little bit longer if we need to. Now, our management team, this is how confident they are in the deal. The Aspen partners have given personal guarantees on this loan. So they met with the wives and got the families together, and they all decided we're going to do a personal guarantee on this loan. A lot of banks right now are pulling back, and we are just thrilled to be able to partner with our bank here. We've known them for a long time, have done multiple deals with them, and they really came through for us on this one. So we're certainly excited to have them there come through on this. So like I said, here's the investment strategy. We're going to close on this thing. Our close date is December 28th. So this is a very, very quick turnaround. So what we'll be doing is we're closing on this thing, then we're breaking ground as soon as possible. We actually break ground early January, is what's slated right now on that first space, 200,000 square feet. Once that's partially completed, then we'll start on that second phase, 140,000 square feet on that one. Construction is expected to actually be relatively short. This is concrete tilt construction, so really, really solid, really robust. As far as manufacturing and warehouse space goes, 9 to 12 months to complete. And then we are trying to get that leased up and stabilized as quickly as possible. So that is our plan there. Once it's fully constructed and leased, listing it on the market. We're trying to sell this thing pretty quickly. And that is when the larger check comes back to our investors. Now, here's the location of this property. You can see the larger and the smaller space right there, located in just a great spot near interstates. Let me go to this next slide. Here are some of the companies that I mentioned before. As you can see, Ironhorse Development right here sits in this line right here. This line is famous in Wichita. This is where all of the aerospace, it's on the south side of town. This is where all the aerospace is manufactured and stored. And so we are excited to be in this part of town for that reason alone. Some more drawings for you here, some architecturals. Space one. Now, like I mentioned, this is concrete tilt on this space. So it is very, very robust. Lots of bays for shipping, lots of docks, extremely high. This is a high clear height, 32 feet. So that not only helps us with stacking up warehousing should we need to, but that really also helps if you have specialized manufacturing that has kind of large, presses or molding equipment, things like that. We have that. Now, I mentioned before that Dan Schulte was on the REIT that helped develop the neighboring property. That neighboring property is an industrial plant. They make dog toys. It's a company called Cosmic Pet. So you might have seen these dog toys in everything from Bass Pro to Dick's Sporting Goods. These dog toys are manufactured right next door. Now that facility has brought in all of the utilities that we need. So all of the electric, the potable water, the sewer lines, everything is there. The roads already in place. And so we're glad to be able to take advantage of that on this unit. Here is building 2, a little bit smaller, but pretty much the same idea here, same concrete tilt and whatnot. Now I should mention, our strategy is to get this thing built and leased. We would love to lease it up to 1 or 2 tenants. Now, here at Aspen, the managing team, these guys, they always have 7 or 8 contingency plans. They've always got something in their back pocket. So the way that they have built or are building these buildings, the architectural design and the engineering is such that we could subdivide these buildings into, I believe it's 8 or 9 different. So we could lease this thing out to 8 or 9 tenants if we need to. So that's far down the road and kind of in our back pocket. We don't really want to do that, but if we need to, we absolutely could. And that's in mind, even with the designs of these buildings. Here, this is Crosslink Construction, some examples of their completed work in the past. I always like to point out this little picture here. This is Chewy. The theme of dog toys and dog food here. This is actually in the Kansas City area where Aspen is headquartered. It's just down the road here. This is a huge facility. This one is an 800,000 square foot facility, and they ship out pet goods and toys. Now here's the cash flow, projected cash flow. I will let you know that for left field folks, we will make available, if we haven't already, the pro forma and underwriting models for this deal. So you can comb through line by line. You can mess with cap rates. You can mess with anything you want to within the spreadsheet and create a bunch of hypothetical scenarios. I guarantee you, we've done every single hypothetical scenario that you could think of. We've already underwritten that and done that in-house, but we'll get that to you so you can kind of play with that yourself here. Point to note is the DSCR down here, little tight in year 1, but we're over 1%. The lender is totally fine with that, over 1, and then it gets a lot better there in year 2, 3, and 4. Should we need to hang on to the property. Sources and uses, again, you can go through this in the underwriting. I would definitely recommend you do so. Now, here is kind of showing you what exit cap rate would be. Now, keep in mind, this is for our normal folks. This is not for left field folks. This is not if you're investing through the tribe, but this gives you a pretty good idea of kind of where we sit on this deal, depending on the exit cap rate here. Now, here at Aspen, we're pretty conservative in our underwriting. We do anticipate cap rates potentially staying the same, expanding a little bit moving forward here. They've been compressing for a couple years. We do not see that happening moving forward, of course, as we're headed into face first into this recession. So we've made these assumptions. These are in that spreadsheet as well. And so you can look into that in our underwriting. And again, recommend that you do. Tax benefits on this one. So there is going to be a nice loss. There's construction costs associated with this. So for the first year, this is 2022 and 23, you're going to have some nice losses on this. And then moving forward, we anticipate a nice kind of capital gain on the back end. So that'd be a long-term capital gain. A good portion of your return would be on that. I can talk more about that if anyone has questions there. Next steps for you all. Of course, you can always call us or email kind of our general investor relations, but we are always available and on the other side of the phone for you. So you can call either Ben here. We got Ben Frazier and Ben Brundage. We make it easy for you. Just holler Ben and then someone will be there. And we will make sure that you get a link to the data room for this deal. So we'll shoot that over. That has the deck, the underwriting model. It has another webinar that you can watch. It's got little videos. It's got drone videos of the property and all of that. Would definitely say we're doing a high level overview here today. If you really want to deep dive on one thing in particular, if you want to talk about the debt, if you want to talk about the risks associated with this deal, whatever it is, I am happy to jump on the phone. I'm happy to jump on Zoom. I know this is a shorter time frame, so we would absolutely make time for you and talk through all of those things with you. We'll make sure that you have our direct contact here. And so with all of that being said, that is this industrial deal. Again, certain risks to consider with a development deal, but hopefully with that maybe smaller amount, if you've ever wanted to kind of dip your toe in the water here in industrial and in development, this is a great place to start. And we're here to answer any questions that you have. So with that all being said, Jim, I know that you might have some questions here.
Yeah, awesome. So there's some questions in the chat. I'll read those out to you, but I'm, because I have the mic, I'm going to ask my question first. And I did get an email with a few questions from somebody else. So I'll ask those first, and then we'll go to the chat. But my main question is, typically the times I have lost money in syndications or investing, it's been when an operator is doing something new, right, that they haven't done before, and they don't maybe have the experience. So, typically we know you guys, I know you're doing new stuff now, but we know you guys as the debt fund, right? So how do I get comfortable with the guys that are doing, non-performing notes? You're now doing an industrial development deal. And I know some of the guys have experience in that, but can you just talk about how we get comfortable with that as investors with an operator that's doing something completely new?
Yeah, great question. Great question. So let me start with the management team, because Aspen did get its start in the mortgage note funds, and we've kind of branched into some other asset classes. But Dan Schulte, this is not his first time in the industrial development space. In fact, he's the one who developed the property next door. So not only does he know the Wichita market extremely well, he knows the ground here extremely well. They did a lot of the earthwork around here. It's a relatively flat area because Dan actually was the one who managed the team who was doing all the earthwork. And so he knows that extremely well. He's done a handful of industrial development deals in the past. Jim Mafuccio is coming almost exclusively from the development side. And really has an extensive background in that, and in California of all places. So a little bit harder in California than it is in central Kansas, just as far as all the hoops that you got to jump through. And then finally, the partners that we brought in: Area Real Estate Development, Wygan, Crossland Construction, and the Greater Wichita Partnership down there. These are all people who are on our team, on our side, who are fighting for this project, who have facilitated conversations with the local municipality and government down there, which has gone extremely well. And these are folks who have 30, 40 years experience in real estate development. Okay.
Excellent. Well, thank you for that. And then the questions that I got on email are about supply chain issues and possible delays in construction, especially with long delivery times, up to 60 months for electrical materials for ground up construction. And this woman said her husband works in sales with a global electrical distribution company, and says that lead times are causing major problems. Where are you in the supply availability needed for this deal, warehousing it on order, et cetera? And she has the same question for other building components. So I think this is just a supply chain issue question.
Yeah, great question right now, especially after the past two years. It has just been madness out there. This is one of the reasons that we chose Crossland. So Crossland is a family-owned company who they have been sitting on a lot of inventory. They don't like that to be public out there. But when all these supply chains started happening, maybe you heard of all these large GCs just buying up steel and buying up all of these things. So that's exactly what they did. And so they're sitting on a lot of materials right now. And we've raised this question with them. The one kind of question mark is the kind of steel garage doors, the big doors. We've been told that they have a supplier, that's good to go. And those orders have already been placed. We've already signed the contract with this GC. And so all the orders are placed. That is the only big question mark that we know about very candidly with you guys, is those steel garage doors.
Okay. And then related, from Kevin, what keeps the general contractor from walking away from the job if it exceeds their guaranteed maximum cost before completion? What incentive do they have to keep working if there are significant cost overruns?
Yeah, good question. So, I mean, this is within the contract that we have with them. We have a payment schedule with them. They do not get paid, and it is a significant amount until work is completed and we've got a schedule for that along the way. So pretty typical industrial kind of contract there. So we've kind of got them on the hook to complete their work.
Okay. And then this one is not one that I understand, but is 3-phase 480 volt available / possible?
That is a very good question. I have no idea. Let me write that down. I can get back to you on that. That's a question for maybe the engineers.
Yeah, that's for Peter. Maybe Peter, if you can throw your email address in there so Ben can get back to you directly, and then maybe share it with me as well, and I'll try and send it out to those that are interested. So we'll move on to the next one. Is there state tax?
Yeah, there would be state tax upon sale of this property. So yeah, moving through, but the tax abatement wipes out the vast majority of our expenses associated with this project.
Okay. What is the current cap rate in Wichita? I assume they mean for these types of deals.
Yeah, for these types of deals, we are in the sixes for that one. We'll get you an updated number on that, and we'll blast that out to everyone.
Okay. And then what type of business is the adjacent neighbor? I think you said dog toys. Is that correct?
It's dog toys, Cosmic Pet.
Cosmic Pets. All right. And then that's slide 30 said you could evaluate a cash out refinance on hold option depending on market conditions. If that happens, how does that affect the LPs?
Yeah, good question. So this is where really, that waterfall comes into play. So if we do a refi, we've got the mini perm option, of course, which is nice. If we need to hang on to the property, you're gonna have some nice cash flow on this one. This is modeled out as well in the underwriting. Would love to just point to that, and we can walk through it individually if you'd like to do so. But yes, it's going to flow through that waterfall, 8% ref for you all, 80-20 split up until that 20% AAR.
So you've built in different exits, like a quick exit or a long-term hold, depending on economic conditions.
Exactly.
Okay.
And again, want to reiterate the main business plan here. We've got a lot of things in our back pocket, but the main business plan is to build this thing, get it leased up and sold as quickly as possible within that 2 to 3 year window.
Okay. Excellent. I'll wait here for just a second. That's all the questions that have been posted. If anybody wants to raise their hand and ask a question, they can, or if I'll just wait like another minute or two to see if there's any other question. Oh, here comes one. How much money is being held in reserves for debt service, operating expenses, and contingencies?
That's a good question. That as well as in the underwriting file. It is, I believe, over 7 figures that we have. And some of that is from our partners individually. So I'll write that down and get back to you all on that one as well.
Okay. And then you said the Aspen folks are investing. The experienced people that you talked about that have experience in development, are they investing in this deal as well? And do you know kind of a ballpark of what the total from Aspen corporate, or not corporate, but the individuals are that they're putting in?
Yeah. So Aspen, the total Aspen investment from our managers and executive team is over $750,000 in this deal. Something that I'm excited about because it makes my job a little bit easier, candidly, is those other partners, Crossland Construction, these are people that we are paying, right? They're going to get nice leasing fees. They're going to get all this stuff. They're putting their personal money in this deal. So we have a handful of guys from Area Real Estate and a handful of guys from Crossland who are kind of backing the truck up for this one as well and sharing it with their friends. And that to me is a really good sign. I also love it because it's less calls that I have to make. Of course.
Right. Okay. Awesome. Well, thank you very much. Just as a reminder to people, this deal, you have to send in the soft commit on that form that was in the email that was sent out today. It will be an email that is sent out tomorrow, hopefully. And then Ben, if you could get that data room link, I can put that in the email as well. But you have to commit by December 12th to be part of the tribe. And the only way this tribe happens is if we get $500,000 of commitments, and then we'll get the better terms and the tribe will go forward. If we don't, then you can invest on your own and not get the better terms, and the minimum will be $100,000. So I just wanted to summarize there. Thank you all for coming. Ben, do you have any last comments for the group?
Thank you guys so much. It's always nice to talk to the left field folks. You guys speak our language, and so we love having you all. So thank you.
Well, thank you very much. We appreciate the opportunity, and we appreciate you reserving that 500,000 with us. I know this is filling up quickly, and we're hopeful that we can take that last 500 from you. So thank you very much, everybody. I will send this recording out as soon as I can get it done. But that's it for this time. We'll see you next time in the left field.